All right, good afternoon, guys. I'm Scarlett Chen, Managing Partner at Verge Healthtech Fund. Verge is a VC fund that invests globally into healthcare technology startups at a very, very early stage. So we do seed and Series A. And our firm, our partners team has invested in 54 different companies from 24 different countries, impacting more than 70 million lives. So that's the quick one sentence that I'll say about us. It's more important that I introduce my panelists. I have a very esteemed panelist today that I really respect. So starting with the far left, so Emmanuel Hui, CEO of Jade, Pebble Accelerator. I've known these guys for a while, so I can say whatever I want about them. So don't be deceived about his young looks. So right out of college, he had his first exit in 2020, a listing, a public listing, very impressive. And he has now been now in the investing role. So he invests under Pebble and also under Jade. So Jade is the investment arm under Tiger Med. And Emmanuel's focus is really Hong Kong and GBA startups or startups with a GBA angle. Yeah. Now moving on to Adrian Lam. Adrian is the I tend to say venture partner for us. That's the second role, but most importantly, he is a managing partner at Bioworld Ventures. And the Bioworld is a group of industry experts who have been operating in the space, who have come together to really contribute their network, their knowledge, their insights about whether it's fundraising, investments, whether it's commercialization, setting up new companies, or helping them scale up operations in this part of the world. So they bring a lot of value, to all the companies and startups. And Adrian comes with 2 decades of experience from also, from operations and also investments. So he's taken products to FDA at, Fortune 500 medtech companies. He has worked in various different investment roles, including sectoral, including what he has done now. So very, very experienced executive. And then Philip, so I feel like I need to say more about you. But so Philip is a very seasoned finance executive with ample experience on the buy side and also on the sell side. He has a lot of experience with fundraising, M&A, strategy, commercialization, and also especially when it comes down to cross-border, right? Helping Chinese companies go global. So that's also something that he's very, very experienced at. So without further ado, I'm going to launch into questions. This is the part that I enjoy the most because usually I tend to speak on panels, but this time I'm loving this experience of actually just asking questions to my esteemed panelists who then answer the questions of whatever that I don't know. So let's go straight into a series of questions. So first, since we have investors here, on the panel, I'm going to, so the investment landscape for the past couple of years within the healthcare space has been quite tough. So whether it's biotech, medtech, healthtech, you name it, and different dynamics in these subsectors. So first, I want to just go into the sectors one by one because I think they're really quite different from each other. So first, I'm going to ask Adrian. So into the medtech space. So what kind of investment trends, as an investor, what kind of trends have you been seeing in the industry in the last couple of years? And also, what do you see now?
Thanks for the question, and thanks for the very, very, very nice introduction. And thanks for calling me old. Just kidding. Of course, everyone who is involved in the venture ecosystem knows that it's been a tough time, right? It's a venture winter. Maybe it's thawed a little bit. In medtech, there's a divergent thing going on here. You're seeing on the news that there are still big deals being done, right? You still see a lot of headline news. At the same time, you hear that there's a lot of small companies really, really struggling with financing. but that's exactly what's happening. There are a lot of big funds who have raised a lot of capital, and they have deployment pressure. You know, these funds raise billions of dollars, and you know, they'd probably rather, you know, instead of doing 4,000 $1 million deals, they'd rather do 40 $100 million deals and then take the summer off, right? So what it means is that transactions getting done are actually getting bigger and bigger. And this actually mirrors the M&A and the acquisitions and the exit environment, right? Ultimately, it's still, it's very, very connected. And you'll see as well that in terms of transactions, companies are getting big, the deals are getting bigger and bigger. So in medtech this year, there have been 4 venture-funded exits only. Typically, it's about 12 to 24, okay? And this year, it's, I can name those 4 companies. There's Abiomed, Shockwave Medical, V-Wave, GenaValve. Only 4 deals. And the average upfront is 500 million. It's massive. And the whole deal value is $1 billion, including milestones. So what that means is that companies in the ecosystem need to survive longer. They need to raise more money and keep going until they hit the exit line. And so it actually is a little bit tough. Now, what I would say is that you know, you probably need to, I would advise companies to, as much as possible, work with strategics, if you can, if you have the luxury to. Strategics, these are the big Fortune 500 companies. You know, you'll notice that actually in 2023, venture financing has bottomed. And now, second quarter 24 was actually the highest quarter in terms of financing in the last year and a half. That's great. You'll also see that there's a lot more corporate involvement in these deals. But in order to get close to the corporates, you need to really be tackling them at a bunch of angles. You need to be talking to multiple champions within these corporates. And you really got to help them rather, remember you. You know, they are dealing with 1,001 inbound projects. They're not going to remember you. So you got to find other ways, like literally find out their hobbies, talk to them about basketball, you know, find out if they have a cooking interest, because you really need to stand out. And people don't care about technology if it's just so much of it. It's a bit boring, actually. So you got to be a bit creative in how you access and continue the conversation and stay warm. So that's what I would say, but it's on the upward trend in terms of financing dollars.
Yeah, I like your comments. So we've been actually talking about 2023 as the year of survival, and 2024, you know, we also began to see recovery. So I think next year we're going to start calling this year, the 2024, as the year of recovery. So turning to the biotech space, I don't know if you're seeing similar trends, Emmanuel. Let's think about the biotech space. So I'm kind of separating the different subsectors.
The macro of it all is as Adrian just described. IPOs have slowed down significantly. Acquisitions are a bit slow, and it's just, you know, survival in 23, right? Was the main thing. But on the other hand, Merck has $76 billion on its balance sheet as June 2024, right? They have a lot of dry powder to buy things, and they're looking. And you know, we see that 90% of the IND applications in clinicaltrial.gov, you know, that are registered are from startups. They're not from big pharma. And so, very much so, there's going to be a big acquisition wave that's coming in 25 and 26. And so, if this 24 is the year of recovery, 26, I think, is the year of exit. I'm hoping. And so, what are they looking to buy? I think that's the question that I always am thinking about, because as Adrian said, the same thing. Doesn't matter if you're working in medtech or in biotech, you want to build to sell. You want to work with strategics so that they can take you out. And as an early stage investor like myself, and in my own experience as well, I sold my company basically to Samsung, right? That's my own experience. And so if I'm trying to replicate this again and again for Hong Kong, what am I trying to build to sell to these strategics? And so then to the question of your trends, I think they are acquiring in 3 things. Okay, first is innovation in macroeconomic trends, aging population, declining fertility. We see, you know, as people age, there's higher incidence of cancer, higher incidence of endocrine diseases, and so especially neuro as well. You know, I think we're already hitting a wall where 1 in 3 people are going to enter or experience dementia. and then the other 1/3 of people are going to have to take care of the third that have dementia. So then you have 2/3 of the population in general that are going to be affected by neurological indications. So definitely, Big Pharma is looking in these macroeconomic and macro trends, and what are some solutions and drugs and that can address them. I think that's one big area that they're looking for. And two is, I think, innovation is becoming more and more specific. We see how cancer is often split into many different subtypes of cancer. You got blood cancer, even breast cancer is now being split into many different types of, EGFR positive, negative, all types of different breast cancer specifically. But that doesn't exist yet for other diseases, like cardiac disease or neurological disease. I think, now we're seeing more drugs being made just for AFib, just for, semilunar valve disease. And that increasing specification of disease indication and treatment therapeutic strategy for that is going to be a new area of growth for a lot of pharmaceutical companies. And then the third, I think, is reformulation. So if you don't realize it, but Ozempic, which is $30 billion in sales this year, is going to be off patent in 2026, and Keytruda is going to be off patent in 2028. And last year, I think Humira is off patent. And so these are multi-billion-dollar annually drugs that are going to be off patent. So what can we do, or what are they looking for? They're looking for reformulations, meaning they're finding maybe new ways, bispecifics, ADCs, many different approaches in which they're looking to extend or reformulate their existing solution. And so if you're building something in that direction, let them buy it. Build it for them so they can buy you to either protect their market position so that they're continuing to making $20-30 billion a year. And as an early stage investor, that's all I'm really interested in, is how can I build things that they want to buy, and those three are what they're looking for in my experience so far. So yeah, that's the trend I'm banking on and also deploying capital on. So my money is where my mouth is. Yeah.
Yeah, no, I really like that. And we're seeing a lot of startups also helping these pharma companies find a new use, right, for these drugs. And, there's so many out there. So, yeah, completely agree. So now turning to you, Philip. So it's been quite tough for Chinese companies to get funding, to go global, for example. So what are some of the helpful strategies that you have seen in the space from your own personal experience, from your observances, etc.?
Yeah, I think before I offer any strategies, I need to break down why it seems to be so tough for China biotech companies to raise funding. I think it's just primarily a macroeconomic trend. We have not seen interest rates being so high. Interest rates have been raised by 500 basis points over the last 24 months. So that type of increase in funding costs has been quite unprecedented in the past 2 decades, right? So I think it's caught many startups and VCs off guard. So I wouldn't say finding it difficult to raise funding is only a Chinese phenomenon. It actually is also true in the United States. So I have friends that are working in Boston telling me that there are now many empty share lab spaces in Cambridge, Massachusetts. So that is a pretty good indicator that startups, even in the United States, are struggling with the much higher funding cost. Now, the Fed did start to reduce rates again last month. So is this the light at the end of the tunnel? I would say don't bet on rates going back to the same low levels for a very, very long time to come, because we are now dealing with a new normal. That inflation is going to be very sticky, right? Especially with the trade frictions that are happening globally, that prices are not coming down as quickly as the central banks are hoping. And I would say, curiously, the only big markets where you see deflation happening is China. So I would say, and the China central bank is actually reducing rates more rapidly now, and printing more money to help with the economy. So I'm, optimistically hoping that things will turn around for China biotechs. But even if it doesn't, I think it's okay. I think we as a market, and by we I mean Chinese investors, Chinese companies, are too new to this, right? This is nothing new. If you ask any US VCs, it's a normal cycle of big businesses, right? Big business cycle where companies, when money is easy, you have so many companies that are being built, and I would say a lot of those companies shouldn't have been built to begin with because, number one, their product is not differentiated enough. The team doesn't have the right mindset or the right type of experience. It's not well managed. So in a down cycle where money is hard to come by, a lot of them do not survive. I think we are just seeing, that being underplay right now. So, sorry, it's a very long answer to your question, but I think I'm just trying to say that, look, it's not just a China phenomenon, it's happening globally, and there's nothing too concerning to me because it's part of the big business cycle.
Yeah, I would say that the high interest rate environment is something that's really affecting different asset classes and various different sectors. So it's not just VC, it's also, for example, hedge funds, right? If you were promising 12% returns before, and now by putting money in the bank, you get 5%, then that's obviously going to change some of the investment decisions. So this is something that we really have to live with going forward. So now, turning back to my investor peers, every time I feel like, when startups, for example, talk to you guys, they probably want funding from you, right? Everyone's, always, constantly pitching you guys. So I want to, ask this question on behalf of the startups, sitting in the audience. What do you look for? Right? What kind of characteristics do you look for? And again, because I want to distinguish between biotech and medtech, and so I'll separate the question kind of in two different categories. So turning to you, so Adrian, first of all, in a medtech startup, what do you look for?
So this is always a funny question to answer because in my opinion, every story is a little bit different. And the investment thesis is always a little bit different. But what I would say in general, there's a few things that I look out for. Number one, you should know more about your problem than me. If you don't, then that's just almost like a deal breaker, right? You need to be teaching me something about what your problem is. That leads to the second thing that I recommend, which is, nobody cares about your solution if they don't care about the problem, right? Just to take an example that everybody knows about, who can tell us the refractive index of your iPhone screen glass or the specs of your accelerometer? Nobody cares, right? So you need to be spending maybe most of your time explaining the problem and actually convincing investors that it actually is a problem that they should care about. Only when they care about that, then you can talk about your solution. So that's the second thing. The third thing is that people always say, we meet a lot of startups in Hong Kong, and it's great. There's a lot of passion and entrepreneurial spirit, right? Every university, a lot of corporates are building accelerators, spinning out companies. But the thing is, they always say, we have the science, and then we have the business. We have a business guy. But science plus business does not mean that you understand the science, the business of science. Those are two completely different concepts. A business guy might know about financial accounting and the capital markets, but what about advice as to how you do a BD alliance and a deal? How do you do an IP license? How do you think about navigating your clinical vendors and your suppliers, right? How do you actually incentivize principal investigators. This is very tactical knowledge that you can't read on a book. And so you can never it's hard to ever figure that out if you're coming from the outside. And which leads to my fourth point, which is I think for any scientific team with a really great idea, I think if you're finding it hard to raise money, perhaps you need to think about, do you need to add an industry person on your team? I think that is the best validation. Hiring someone into your startup who is from the industry, that's like the best validation of your technology, right? Nobody in the industry is going to jump out and just take the job without it being a very, very attractive proposition, a scientifically sound proposition. That's the best validation, So I would really encourage founders to really focus on the recruitment side of things and getting that industry talent in the door.
Yeah, I really like the concept of building a team, right? Because nobody's got the science and the business and the industry. It's like that almost doesn't exist, right? So you build a team around that.
Village, right? So
yeah,
you need all the villagers.
It takes a village. Yeah, it takes a village, yeah. So turning to you, Emmanuel. So what about on the biotech side? What kind of characteristics do you look for?
I completely agree with everything Adrian just said, but I'm just going to rephrase it a little bit and sort of
have to. You can say I'm an idiot.
No, because I think you covered all the bases very, very, very fully, and you have actually much more experience than me, and I look up to you a lot, so I learn from you as well. But I like to think about 3 Ps. I always say: people, patents, project. People come first. No matter what, if you don't have the right people, it doesn't matter how good your project is or your patents or what, forget it. I need to be able to trust that person. And just to give you a statistic, last year, 2024, I made 13 deals, 2 of which I invested in just because of the founder. I met the founder in the morning, afternoon I wrote a check. Very impulsive, but because I knew they had what it takes. I knew they had the track record, the passion, the people around them. And of course, it's very also within my risk portfolio. I'm not writing 13 checks because of the people, only 2. 2 out of 13, I feel like I'm allocating my risk accordingly where, okay, these are relationship investments. These are people investments, where even without going through the full due diligence, I have already decided I want to invest. And that's why, Elon Musk famously said fundraising is easy. He just makes a couple phone calls. Well, of course, when you're him, it's easy. It's easy to raise. Okay. There are a couple people out there that are like that. And, being able to raise money is a bit of a magic power that you don't underestimate. Don't underestimate that. And so I definitely have met founders that are better than me at fundraising and marketing and everything. And I thought, you know what? I want to do what they're doing. I want to follow them. So people, number 1. Okay, number 2, patents. Okay, that just goes back to then the fundamentals of it. Is it scientifically robust? What are the preclinical data? How does it look like? And is it properly patented? I think about composition of matter, method of making, method of use. Are all things covered? Can somebody else file a different patent to block your patent? These are all basic things that I think every due diligence team has to go through. And then finally, a project. So you can have a fantastic patent suite and fantastic project clinical data, but if you don't have a project plan that's viable, if you don't have the right business model, just because you know business doesn't mean you know the business of science. I love that. Exactly. Because if there's no FDA clinical pathway, if there are no primary endpoints that are already approved by the FDA for your disease indication, then no matter what you do, you'll be dead in the water with the FDA for 10 years, trying to figure out a new therapy for a new indication. And so how do you find the right project that can get approved regulatorily? Get you paid through insurance programs or 2C, if your business is a 2C model, get you paid. And then how can you also then exit, get out and sell your company that's more for us. But then I think as a startup founder too, I love to hear it when they tell me this is how I plan to exit. And actually that's also a standard question we regularly ask. And so that's how basically what Adrian said. But if I were to do bullet points, people, patents, project. Thanks.
I really like this, and especially the emphasis on people. So because we're early stage investors, the people is really, really key. Who can actually pull this through? So completely agree.
Yeah, I'd just like to add to what Emmanuel and Adrian was saying. I completely agree with them that, look, it's the people. Just speaking from having worked for multiple founders, in my experience, I would say if I were to give any advice to early stage startups, it's finding the right people, right? I've recently come across this video shorts from Jeff Bezos, and he said that he does some investing himself, and he said that the most successful type of founders or founding team tend to be missionary rather than mercenary, right? So you need to find people that share the same vision as you, that are not doing this for the glory, not for the money. There's really no big money, at least in the initial stage. And the rewards can be very long dated if it ever comes at all. So if you're not working with people who share the same vision, who really do it for the love of that vision and hold it steadfastly, the company will very likely suffer. And in terms of how do you find those people, well, you basically spend most of your time as founder and CEO interviewing, recruiting people, and from the get-go, you may or may not find the best people. And honestly, you cannot afford to hire superstars because they are too expensive. But you need to know whether, if that person shares the same vision, whether they have the ability to learn. If they can learn, they can absorb, then they can improve themselves through the process to be much better executives than they are in day one. And to that end, how do you maintain and retain these talents, right? I would say founders in Asia generally can be a little bit more generous with their equity, right? Because you don't want to burn all your cash, right? Keeping the engineers or the scientists on very high cash compensation. You cannot afford to do that. Because if it's a down cycle in fundraising, you will run out of cash. But you should always think about granting them equity, right, over very clear and transparent, observable, measurable goals.
Actually, I want to supplement that with just a quick comment, right? It's exactly that concept where, you know, early stage companies don't have that much cash resources. So so the only sort of currency you have to hire these more senior people, experienced people, is if you have a convincing story. So if you are unable to hire that person, you might take a look in the mirror and say, maybe our science, maybe our business model is not convincing enough, right? And only when it becomes convincing enough, then these really talented, experienced people, they might take a sacrifice on salary to join you because your story, your technology, your 3 Ps is strong enough. So, you know, there's another way to look at it.
And I would even say that, you know, in my personal experience, I feel that it's actually easy to make money elsewhere. I really think that it's very easy to make money anywhere. So, but healthcare, my God, this is not for the faint of heart, right? You have to you really have to love it. You really have to be so vision driven to do what you do, because it's just so much harder, right, in this space. So, and actually, you know,
it's not easy for us, Scarlett. Okay, it's easy for you.
But I think that good people, or these superstars, can sometimes be free or even quite cheap. Not cheap, but comparative speaking, if you have the right story, if you have the right vision, right? So yeah, completely agree on what you guys were just remarking about. So now, Philip, so I want to stay with you for a second. There are lots of Hong Kong startups here. Yeah. And I think Hong Kong is an interesting market, but it's just very small. So how do you help Hong Kong? Do you have any strategies for helping Hong Kong startups to go international? Or just in general, getting grants, getting whatever help that you can get, right, from the government.
Is this specific for healthcare or for all tech industries?
I think given that this is a healthcare conference, then let's stay with that.
Okay. Yeah, you're right. I mean, we only have about, 7.5 million people. So in terms of sample size, we have a very tiny market compared to mainland China and the US. So I would advise any founders in the healthcare industries, maybe more so in medtech and biotech, that if you want to start a company, always measure your business plan against the standard of care. What is being provided by existing players? Is your product differentiated enough? Or is it just promising marginal improvement? I think if you're just promising marginal improvement, is not good enough, right? You need to dream big and build companies around big impact solutions that are missing right now in the marketplace. And those marketplaces should be in big single markets like China or the US. I mean, even the EU is a bit more fragmented. You need to do a little bit more work in talking to reimbursement, talking to insurance companies to scale up in Europe. So I'll say if you can nail down China and or US, the game is over. Yeah. So that, and but how do you do that from Hong Kong? I think just travel more, right? Talk to people that are familiar in those two markets. And with the increasing integration of Hong Kong into the GBA, definitely leverage that. I think what Hong Kong, interestingly, can provide, which mainland China doesn't have, is ethnic diversity. I think that can be very powerful in terms of Hong Kong finding and recruiting patients that are not Chinese and actually send them over to maybe Shenzhen. I think we got very good hospitals that are run by Hong Kong U that would be quite interested to take on those clinical trials, etc. So think about along those lines.
Yeah, definitely use Hong Kong for its advantages, right? Clinical trials, for example, especially in this very interesting GBA region. So now I want to turn to Emmanuel and also to Adrian as well to follow on this kind of train of thought. So Emmanuel, you also help a lot of Hong Kong startups. Any specific pointers when it comes down to helping Hong Kong companies, for example, get funding, right, from other Hong Kong investors or from others? Anything to add there?
I think the most honest answer I can have to that is that a lot of the times the funding sources you can get from Hong Kong and China are politically motivated. They are there with an agenda that is in place and in line with what the government is hoping to achieve. Maybe actually innovation is not what the government wants, it's employment numbers to go up. Maybe they want local manufacturing to happen locally, even if it is at a deficit to the government, or like the amount that the government is providing actually it's not offset until like 20 years later based on a model of the financial output of the factory. So I think a lot of startups go about relatively naively into thinking, oh, we have a good project, we got a good product, why won't the government fund us? Why won't this university or this philanthropic agency or whatever, why can't we get funding from these sources? It's because you fundamentally don't understand what their motivation is. Their motivation sometimes is not financial returns. Maybe it's not even a humanitarian motivation. They don't really care about saving lives. What do they care about? They care about hitting specific political KPIs. And if you can understand that and you can sort of be aligned with that, then everything else that you really want to achieve into saving lives and helping people and making, ideally generating returns for your shareholders, all of that is a part of the game that you have to play. And you have to play the game, And that's just a very honest answer. And there's no way around it. Yeah.
I appreciate that. And also later on, I think this is going to be on YouTube, right? So
yeah. There's no point hiding.
Yeah. All right. So turning to you, Adrian, cross-border, right? So you've actually done some very interesting work helping scale up companies, also do cross-border work and also helping them expand. Any pointers, any strategies here?
Yeah. I mean, first of all, we don't know. I don't know. You know, you try to be innovative. Every company is a bit different. You know, we pretend to be experts, but honestly, sometimes you just got to be smart and nimble and agile, right? And I would just answering the question more directly. I think inbound and outbound slightly different. Outbound first. Outbound. How I look at things is how we look at things at Bioworld is from a technology angle and from a business strategy angle, the world is flat. And what I mean by that is, you know, oftentimes academics and scientists and engineers like to work within their comfort zone, right? But somebody somewhere in another country has thought about your strategy. Or maybe 10 years ago, someone has tried it. You need to understand what failed. You know, maybe it's just bad timing. It was too early, you know? And now maybe it's a good time to try again. You know, you need to be looking at the University of Paraguay. You need to be looking at spin-outs from ETH Zurich, right? I'm sure someone in that department has done something similar to you. So really, the world is flat, and you need to do your homework, you need to do your research, okay? And also in terms of, and then maybe switching gears to inbound, I think what Emmanuel said is very interesting in the way that, look, the investments and capital markets are unfortunately not always driven by the science. It's driven by the science and the capital markets. You know, one very successful company now, big pharma, Vertex. You know, the story of when Vertex came out, they were looking at, it was immunophilins, which is like the transplantation, tacrolimus. And then, but nobody cared, you know, it was hard to raise money then. And HIV was starting to come into the fore, and they had an asset in HIV. And Josh Boger, the founder of Vertex, is like, oh, I hate HIV, I hate infectious diseases. But a Japanese company wanted to do, I think this is, please someone correct me if I'm wrong, but you know, they had, some Japanese company wanted to develop an asset in HIV. And so they begrudgingly took that money, something like, I forgot, a couple of tens of millions. And they did that project just because that's what the markets wanted. And then they spent some of that in kitchen building, right? Helping with the rest of the franchise. So unfortunately, that's the case. That's why you need to know, industry. You need to know capital markets. You need to know what's going on. It's not always about the science, unfortunately, and helping patients. It should be, but it's not. And just the last sentence is like right now, man, it's all about neuroscience, neurostimulation, neuromodulation, brain-computer interfaces. There's so many companies in that space right now. Doesn't mean that that's where all the unmet need is. There's a huge unmet need there, but there's also unmet need everywhere else. So you need to know, you need to balance that science and the unmet need with what people actually want right now and where they're deploying and the strategic mandates of the big strategics.
So within Verge, we have a database of, we don't keep track of all the companies, but only the companies which are relevant to us. And we have over 2,000 companies. And I cannot tell you how many do exactly the same thing, but just in different parts of the world, right? So every time we're like, oh, this again, right? So like, because we just see this over and over and over again. And it's like, please, you know, it actually is quite hurtful to see that happen, because I said, you know, you should have known that somebody has done this 5 years ago and has actually made it quite successful in some parts of the world. So yeah, agreed.
And I just want to add to that, where, you know, why does somebody fail in Paraguay but can be very successful in China? You know, I think, again, I want to add or you know, supplement what my answer just now.
Unmet need arbitrage, almost.
Yes, exactly. But how? Why is there why does that arbitrage opportunity exist? Sometimes it is because of politics or because of market, or it's driven by factors that are external to what actually is you are thinking about in terms of building a startup. And so, just because it's politically motivated or market driven doesn't mean it's bad. You know, it's what I'm trying to say. It's a part of the game, and you have to understand why, and why maybe what you should do is bring that asset to China. And so I think we have an opportunity now in Hong Kong, actually, where we are very politically motivated. There's an agenda on the table to make things happen. And that's an obvious, publicly stated objective of the government. So we should make it happen. We should meet them where they want to be met. Whether it's in whatever sphere you're in,
So I think there are certainly really interesting arbitrage opportunities right now. So within Verge, we call these, we frame some of these as regulatory arbitrage, so commercial arbitrage. And there are like 5 different types of arbitrage that we can play on a global basis. So it's actually very interesting. So yes, actually, and we have invested in the same solution, but in different parts, but given different reasons as well. So so very interesting. I'm looking at the clock, so we only have about 4 minutes left, and I still have about 4 more questions. But I'm going to go around the panel and dive into one last question, which is really around AI. So AI is a very hot topic, obviously everywhere. Some people say, well, yes, we can see great usage of AI in every industry. And in fact, within healthcare, so after the technology industry, healthcare has actually been the second industry consistently that uses AI. And some people say, well, there's a lot of hype. You look at the most recent valuation, OpenAI, I think that was 150, I forgot, 156 or 157 or something like that, billion, right? So I guess then quickly, hopefully 1 minute each, what do you think is going on?
Okay, I'll start first since I'm probably the dumbest on this topic. In saying this, I'm not speaking on behalf of any companies I work for. It's my personal view. I think AI has really been phenomenal in predicting molecular structures, and I think Google's AlphaFold has been improving a lot to predict protein-to-protein interaction. So I think AI is getting pretty good now in terms of getting binding prediction, and it will continue to perfect. But I would say the cascade of disease biology that follows the binding of molecules is actually very complex, and actually even physicians may not completely understand every step of the way of very complicated disease biology. So an analogy that I would use is AI is very good in predicting 2 people meeting for the first time and having love at first sight. But AI cannot predict whether those 2 people will get married and live happily ever after.
Yeah, find the molecule that works, but who knows if it's going to make it through the clinical trial, right? So, all right.
I'll speak just because we are running out of time. I'm just going to throw out 2 facts. 700 plus AI machine learning algorithms approved by the US FDA. Also quite a lot in the mainland, but yet very few that are actually deeply adopted. And then the second point is, after the first point, why, right? And the second point is actually, I have a mini anecdote about one of the portfolio companies of ours in Bioworld. It's a machine learning-based healthcare technology. It's not generative AI. One of the indications is FDA cleared for coronary artery disease. It's called CorVista. And the second indication is pulmonary hypertension, elevated blood pressure in the lungs. When they went through the FDA, it's a breakthrough designation. And we were able to convince the FDA very well that this is not black box. This is just fancy maths, fancy statistics, actually. And that becomes a lot more explainability is huge, and probably a deal maker / deal, the opposite of a deal breaker. And then that's the first level. And then the second level is we're actually launching now in clinics and with doctors and nurses. And if you can't explain what's going on, That's a really big challenge. So we are here explaining, actually, this is just really, really fancy math that you are actually kind of doing, but except it's like parallel processing of a lot of signals, but it's very explainable. And that then helps with adoption, you know? So I think that explainability is huge. And also generative AI, maybe it's not for the front line for now, right? Maybe it's more for business efficiency, right? Where it's not like bad, you know, a false negative results in a death. You know, maybe it's business efficiency, operational management, augmentation in the back. And for now, you know, AI and drug discovery is a little bit like that. You're not going to immediately put a molecule invented from alpha protein or alpha fold immediately into a human, right? There's a lot of layers of verification, validation before it goes. There's a lot of checks and balances. So maybe different AI tools might be used, might be more appropriate for different applications within the sector.
Yeah, I'm just going to speak from personal experience. Last year, we had about 200-ish companies. Well, this year, 2024, 200-ish companies in our deal flow pipeline. 20-ish, which we did due diligence on that were AI related, and we only invested in one. And that one company, why did we invest? Because they found a way to get paid. And that's the biggest problem. A lot of the AI, I don't really care at the moment, unless you can show me who's paying for your AI. You know, is it the hospital? Is it the doctor? Is it the patient? Or is it some other middle business? Is it a B2B business or the government? You know, show me how you're getting paid. Then I'm interested. And 90% of it right now can't answer that question. So that's a short answer.
And AI or not, does it actually solve a real problem? Is it a solution that's looking for a problem? And does it have a real business model? I think that's ultimately, you know, as any business solutions or enterprise solutions need to look for. So yeah, completely agree. So this is the end of the discussion, and I have certainly learned a lot from my panelists, and I hope you have enjoyed it all as well. So a round of applause for my panelists.